Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has helped provide funds to purchase more than 4,500 apartment units worth over $400 million. He works with investors and operators to acquire multifamily self-storage and manufactured home park properties. David Thompson is founder and CEO of Thompson Investing. David, welcome to Purchase to Profits. It's great to have you on the show.
Yeah, great. Thanks for having me. I appreciate it. Looking forward to sharing some ideas with you and the audience. Sounds good.
Yeah, absolutely. I'm really interested because you are an expert on the capital raising side. So I'm really looking to hear what value you can provide not only to myself,
Sure.
but everybody watching.
Absolutely. Sounds good.
So to kick things off, do you want to tell us about your real estate goals right now? What are you looking to do?
Sure. So I've been doing syndication for about 3 years, 20 plus deals in apartments, self-storage, manufactured home parks, those niches that we like. I've got a very strong investor base that likes these deals, and they're referring a lot of folks to us. So it's growing very well that way. Our next goal is I do have a group of folks I have a couple business models. One is continuing to provide great opportunities to those investors. So it might be, hey, are we going to have another niche that we might be interested in? We're always looking at new niches, but we don't want to be Baskin Robbins, right? 32 flavors. I like to stick to kind of some areas that we like and we've researched well. But I think, variety and diversification is important. We always preach that with our investors that, geographic diversification, niche diversification, operator diversification is really important. So I believe we'll be involved. I expect us to be evolving into some new areas as we go. We've added also a little bit of, icing on the cake, shall we say. Can we stay kind of in our lane around tried and true niches? If you look back at the last 25 years, these niches of apartments, self-storage, and manufactured home parks have really done well. I mean, beating the S&P 500 stock market by 7 to 10%. With far less volatility. Oh, and by the way, it pays you cash flow on the way, and how these great tax benefits that no one knows about. So it's kind of a cool world we play in, because every time I talk to someone, like, you do what? And tell me more about that. So it's a cool space. We like it, but we're careful about staying in those lanes where we feel like we're really comfortable. But I'm approached all the time because we raise funds for a lot of these deals. Operators come to us with their own deals, right? We're careful about that. We don't want to be a transactional house, because it takes a lot of energy to vet the person behind the deal, the team, the market they're in. So that would slow us down quite a bit. So we tend to have long-term partnerships with our operators. But I am always looking for new operators that are in different markets, different geographies, specifically areas that might be kind of interesting, emerging, where people haven't really thought too much about it, but it might be something to maybe add a little bit of flavor and excitement to your portfolio without, going into a lot of uncharted territory, right? So I'm looking to do that. I also have a very active mentoring coaching program around capital raising. So that's a second business, really. A lot of people come into the business as an investor, and then later they realize, wow, sounds like I'm learning a lot. I'm seeing my wealth increase, and it's really fascinating to me. And how do I get more involved? And so capital raising is one area you can help a general partnership team on. Having investor relationships with these investors that you maintain, and really is a growing area. I think a little bit of an area that's not really talked about too much, but I can tell you every operator I talk to needs capital. They want to do bigger deals, more deals. They don't care how successful they are. They have a thirst for capital. So if you can get on one of these teams and provide value that way, it's one fantastic way to enter the syndication world and build a business.
Yeah. And, the operators I talk to, they'll say, oh, I want to acquire X amount of units per year. Do you have, so many dollars that you want to put into deals in a year? Do you say, I want to place, 10 million this year in X amount of deals?
Great question. I keep probably my goals a little bit light. I have vision on how much I want to raise. So as a Thompson Investing, I have some folks also work with me as a team. Last year we raised close to $50 million. So to me, if I could double that, do 100 million this year, a few more deals, maybe bigger deals, maybe we're taking a lead role in the capital raising side of the equation. Maybe do some funds where we keep things open for a year, and maybe it's a $25 million fund and we're raising for different things like that. So we have some levers to push to, increase that amount. So I'm excited there. There's still going to be a lot of popularity and excitement with investors to get into these spaces. We really focus on education at the end of the day. I just find that so many people don't know about these areas. They're not well educated on them. And, we simply just try to get ourselves in front of folks, explain what we do, and offer them, good deal flow. But yeah, I would say for us as a capital raising group, one is how much capital you are bringing into deals. The number of deals, we did 13 last year, very busy.
Yeah.
Do I want to do 20? That's a lot of work. But I think bigger deals, being a little bit more targeted, probably 10 to 15 deals a year is probably a right amount. And then doing more sizable deals. There's one other area that I'm really interested in is really helping, I would say, emerging operators. So these are operators that have done 2, 3, 4 deals, and they realize their forte is finding deals and optimizing the deal. They really don't want to deal with anything else. They don't want to deal with the investor. They don't want to put together marketing decks. They don't want to really talk to investors too much. They don't mind it maybe, but that's not their best strength, right?
Yeah.
And they don't want to deal with the back office, all of the distributions, the accounting work, the K-1 statements. So I really see a big business model developing where we can help take over some of those responsibilities. Certainly don't want to expose our investors to really inexperienced operators, but these are operators who have really proven themselves over 2, 3, 4 deals, starting to go bigger, but they really need that. They now have to come to that crossroads to say, I can't do all the work myself, right? I need to compartmentalize and go find help. And I think that's where the business can evolve to, where you're really, selectively helping operators who are emerging really take it to the next level.
Yeah. And you had mentioned before that nothing happens without capital. So I'm pretty sure everybody watching this is salivating, just wondering what your secrets are. Do you have any routines, or do you have any structure in your day or maybe week that allows you to stay focused and really helps with the money raising side?
Yeah, I mean, it sounds kind of interesting, because if you think about capital raising, the first thing you think about is going out and talking to people and maybe having this, kind of sales focus, right? And that's totally not the right way to do it. And I can tell you, as successful as I feel like I am in this particular space, there's a lot of obviously new things to learn, right? You always get better. But I think the most important thing is when I got out of college, I went to Arizona State. I had a degree in financial planning. And I didn't realize it was really an entrepreneurial field. I felt, I didn't do my research well enough. I got out thinking someone's going to hire me. I'm going to do financial planning. Well, if you look at a financial planner, they're typically it's an entrepreneur who's out there, they love what they're doing, but they have to go find customers and clients, right? And at 22 years old, trying to talk to people that had money in their 40s and 50s, and that's a stretch. So I went to work for a large mutual fund or insurance company, who was going to give me a little bit of money, kind of a draw, to go out and sell whole life insurance policies and disability insurance policies. And that was probably about the least sexiest thing I really wanted to do at the time. But I was like, this guy got a job. I did about 6 months, and that technique was, cold calling people. And I hated it so much, I ended up, hiring a cold calling company for me. And that was a disaster. They didn't qualify people very well. So I hung it up after 6 months. And here's the issue, Seth, and I think this may challenge a lot of people too. If you fail at something, like egg in your face, like this is a disaster, oftentimes you just close that door for good, right? I went to get my master's degree in international business. I had a fine career, 20 years in the corporate world, a really nice management positions, traveled around the world, had great teams around great people. But when I was ready to hang that up, or through that whole experience, I never did a sales and marketing role. I led teams and everything, but internals, but nothing outward facing, right? Never would have thought about raising capital or talking to investors about giving me money for this opportunity. When I started into syndication, I left the corporate world. I got a mentor. And I was, kind of understanding how to do this. And one of the things that that dawned on me. He never talked about sales and marketing the whole time. He just said, "Hey, listen, when you're passionate about real estate, I get that. You want to work in the syndication, get that." I said, "How can I help you?" He goes, "Well, you can help me with do some due diligence on the property, great, but we hire a third-party company to do that, so really they're professionals. But you can learn some things. But the most important thing, you guys raise some capital. We need $8 million. It was a deal in Dallas. Carrollton Notes said, hey, we need to go raise $8 million, and you're going to need to learn how to do something to help us. How about you? We'll give you the great deal, a great market. It's an apartment, and we're going to show you the business plan. Why don't you just go talk to people that you know in your network and see if they'd be interested?" So that's how I started. I raised $1 million in 2 weeks. It was not just clear sailing, but he never mentioned sales and marketing. How I framed it was, you're educating people an opportunity that they never knew existed. We only know our 401ks, IRAs, stocks. You're, big mutual fund companies, big advertising budgets. That's all you hear. These are private placements. These are private deals. We don't advertise them. We can't advertise them. So it's really through relationships, word of mouth, and kind of getting to know people. So if I can, if I can minimize the concern or fear that anybody might have in talking to people about an investment opportunity and raising capital, I found if you like the deal, because we would do the deals ourselves, we'd invest in them ourselves. I said, well, if I'm investing, I'll turn to my family and friends, and then that just kind of mushroomed from there, because it's really a return investor referral business. It's 85% of my business today is not going out and finding new customers. It's maybe 15%. Now let me turn to that 15%. Okay, so where do you get new people? And we were having this conversation before the interview started. So I did not attend this conference, but I got the excerpt from it, and it was a conference on capital raising. And this lady was talking at the conference. So here's a conference of capital raisers in the audience. And she had raised $3 billion in her career. $3 billion, right? That's a huge amount. I'm at 75, okay? 3 years into it. So $3 billion is a long way to go. She said, she had everybody raise their hand in the audience. Does anybody know what thought leadership is? And like 5% of the people raised their hand. And she said, well, that's the holy grail of capital raising. And that, I was fortunate to be around a person in my life when I started in syndication that came from that background. And they never mentioned sales marketing. They talked about thought leadership, which is basically what you're doing right now, a podcast or a blog or a video or something, a newsletter, something where you're giving out an opportunity for readers to opt in and read something, learn something, and then you are perceived as the expert, or at least having some knowledge that they don't have, and they'll come to your website. And there's a capture page, and it's like, hey, are you an accredited investor? Are you, what are you interested in? And then that will prompt a 30-minute conversation or a call, and then away we go. Is this the right fit or not? But that's all an attraction, right? You're attracting wealth. You're attracting people to you through a program. You're not going out knocking on doors. I did a little bit of that. I went to some multifamily meetup groups when I first started, and I kind of like a shotgun. I kind of sprayed the field, what's going to stick, And I quickly realized that is not a very efficient use of your time. Give you an example. Multifamily meetup group, it's going to be most people who are active. They want to do their own deals. They're not interested in being your investor. They're active. I'm looking for passive investors, people who are really busy with their day job, appreciate real estate, have extra capital, and want experts to manage that for them and grow a portfolio in cash, right? That's what we do. So I tried a bunch of different things. But at the end of the day, that was one of my tips, is thought leadership, okay? And the second, I have about 5 or 10 tips, but let me just give you the second most powerful one, and we can move on to something else. The second most powerful thing to get started in this business or learn is, for capital raisers, is partner with experts. Okay? How many times do you have an idea and you turn to your best friend? Or how many times do you turn to a family member? They're not experts, but you end up feeling comfortable with them, and let's go do this business. Let's go do this thing. You don't go find someone you don't know, or through maybe a referral that's the right person for you. So when I started raising capital, I didn't do it on my own deal, okay? I didn't, because I had no experience. Who would want to put money with me? I had no experience taking down an apartment. So I think a lot of people could greatly accelerate their business plan in the capital raising space by finding people who already got some deals under their belt, But like the group I was mentioning, they've done 2, 3, 4 deals. They've got some track record. Maybe they exited one deal, but they've got something going on. They're professional. They know what they're doing. And you spend some time with them, and I guarantee you they're going to need someone to help them raise capital, even if it's a small amount. Just get your foot in the door. And that's what I did. So I have 5 or 6 operators that I work with consistently. I don't do every deal that they offer because sometimes it's not the right time and maybe not the right fit, but I'm exposed to all the deals that they do. 4 of the 5 operators, we've now grown the business to the point now 4 of the 5 operators come to us first when I get a deal. They call me, hey, what do you think? Let's meet me at the property. What do you think? And because we're bringing so much capital and value to them, we're able to turn around and bring that kind of value to our investors. More deals, more good, cherry pick deals that they're really good deals. And that all started because I bit the bullet and didn't think I could do everything myself. Yeah. I found other members who are better than I am. They're 10 times better at finding deals, love spreadsheets, love to analyze stuff. I appreciate that. I know how to look at underwriting and know if it's a good assumptions or risky assumption. I know how to do that, but I don't want to spend most of my day doing that. I'd rather talk to you, Seth, all day, or investors all day about how to help them create this wonderful passive income stream and grow their net worth and create some kind of life. My motto is, we want to get you to where you can live your life on your terms. If that means I have a crappy job, okay, great. Keep doing that crappy job until we get you to financial freedom or whatever that is. Or, go part-time or, spend some more time with your family and your husband can work full-time. And, so ultimately, there's got to be a goal of this mission. But that's where I get jazzed. I get jazzed educating and talking to people. And I have team members that are really good at something else. Yeah. So partner with experts and develop a thought leadership program. Those are my 2 most powerful tips. There's all sorts of other things, but for this segment of the show, that's good for now.
Yeah, those are some really good tips. And one of the questions I get all the time from people starting into the capital raising process is, what do I say? And I always try and flip around saying, you don't have to worry about what you're saying. You have to listen first. Do you want to throw in a couple points about how important listening to the investor?
Yeah, I mean, if I start talking too much, I feel like I'm selling something, right? I really feel like I'm selling, and it's hard because I'm passionate. So sometimes I just have to stop myself and say, "Have I worn you down yet?" Or and some of that passion is cool. I mean, people just appreciate that you like it. They'll let you go a little further, but what I like to do is I like to send people, like if someone came to my website and said, hey, interested in learning more about what you do or whatever, I always have like a 1-page email. Here's a 3-minute video on what we do. And so they can listen to that, save them some time. I have a blog, one of my latest blogs that's pretty generic, why I like investing in multifamily apartments or why I like these 3 niches for downside protection. Something, and when they click on that, it goes to my website. So then they see all the deals we've done. And so it's just this whole thing that's kind of simple. And then I have a link, 30 minutes, would you like to talk? Would love to learn about you and understand what you're trying to do and see if we might be a fit for each other. Very simple. So I want, when I call them, they'll set up an appointment with me, they call me, and then I always first just want to know about them. Who are they? Where do they live? They have a family? What's their job? Kind of give it a little bit, maybe 5 minutes. And what's your experience with real estate? Get them talking for 5 minutes or so. How did you get to my site? What prompted you? That takes 5 minutes, but I learned a lot about them, and I think they appreciate the fact that I'm not just a business here. I'm a person. I have a family. I try to resonate with them. I bartended my way through school, and so I learned. I wasn't always extroverted, maybe like I am now, but I wasn't so always out there like that. I had 3 older sisters that always talked for me. I was pretty shy until I was 18 years old. And I started bartending, and I had to talk to people. But I learned that you just have to listen, get people started. But then once they start talking, then you can relate. The second thing is relating to them. So, you went to, you're living. You can find if you tell me, if you talk to me for 5 minutes, I can relate something that you're doing to what I'm interested in. Of course, capital raising, that's easy. But maybe you're in a part of the country I grew up in, or maybe you went to school, best friend went to that school, and I visited, it was a great school. Just get something to where you're relating to that. That would be a second tip. Not just because sometimes just asking questions kind of can, but then developing that relationship. That's what we're trying to do. And then I explain at a high level what we do. If you have no experience in syndication, I'm going to start or investing in apartments. I'm going to start at a higher level with you. Like I tell people, here's an example. Everybody watches flipping shows. Okay, value add apartment investing, it may be a 5-year hold, but realistically, it's a slow motion flip. It takes 2 years to renovate this apartment. We don't renovate when people are living there. So when leases expire, we start renovating. It's like a pancake back and forth. It takes about 2 years. So I start people at a high level. Oh yeah, that makes a lot of sense. Yeah, I get it. And then just high level concepts versus someone who's very sophisticated. I'm like, definitely want to send them a closed deal, maybe a little bit of underwriting on our last deal so they can see the detail that we go, maybe a sensitivity analysis, especially if they're an engineer. So
Yes.
I'm not like perfect with this, but I try to understand people very quickly, size them up pretty quickly. Are they really technical? Are they a lawyer or doctor? You got a lot of a technical background, education. They're going to want more information. And then someone who's a little bit higher level, I may just send a closed deal, high level summary deck, kind of what this looks like and maybe returns on one of the operators I'm working with so they get an idea what to expect. But it's more like what to expect. I remember my wife, when she was pregnant many years ago, what to expect when expecting, I think there's a lot of investors that just want to be a little bit educated. What is all this about? It's too much information. So I do put on my website, or in that email, that first email with them, I may put on, 25 or 20 frequently asked questions on syndication, or definitely if we're talking, they like apartments, I'll send them a follow-up email. Hey, great talking to you. Go look at this closed deal. And here's a link on a blog I did around 5 reasons I love apartment investing, right? You're credible. You're blogging. You've got a podcast. You may have a video. I can see on your website, you've got these deals, and it looks like you've had some experiences here. That's really, you're just trying to build some credibility, and then see what they're interested in. I put them on my investor list, and if they qualify as a creditor or whatever, and then they can be exposed to opportunities down the road. And whether they do a deal now or later, they're in my network. But listening is the key. Gets them going.
Yeah, for sure. So out of all the deals you've done, is there one that stands out as an interesting deal, or especially from the capital raising side? Do you have one deal where there's a really good story behind it, maybe some challenges or something that really worked out?
There's 2 that stand in my mind. I won't go in detail on both of them. If I can mention 2 of them. One was the first deal. I think you always remember the first deal, right? I'll tell you this one story. Well, that was the one deal. The other deal, we raised $4 million in 48 hours. Okay, that's the biggest we've ever done. But I won't talk about that one. The one that's the most interesting to me is the first one. It's because I had a mentor, and he set a $500,000 target. I had like 4 weeks to kind of get there to help him with his raise. And the first investor I met, a friend of one of my daughters, that the dad of one of the daughters swam or something with my daughter, and I knew him fairly well, but not a friend or anything, just acquaintance. I invited him over, and he looked at this opportunity, and he just went, "Oh my gosh, I want to do 500,000." Right? And I've never had anybody since, and I've talked to 1,000 investors just say I want to do 500,000. That was the first meeting. I've done thousands of talks, so that's the first one. And about 2 or 3 weeks later, he ended up talking to his brother, who had an apartment in a really tough area of, I think it was New Orleans or something. So it was a totally different model than we work in. There's different strategies around that. But if you work in tougher areas, turnaround strategies where it's 50% vacant, those can be profitable, but you got to really know what's going on, right? And so his brother had a really bad experience with that and lost a lot of money. And multifamily, if you research the history, is very, very safe, but in the hands of the wrong market, the wrong operator, can't be. So his experience was just his brother. And after 2 weeks, he was like, and he didn't tell me he was not doing it till like the last minute. Like that was the other hard part. So that was the biggest learning lesson. Because I remember coming out of that meeting thinking, on the first meeting with him, I called my mentor and said, "This is easy. Capital raising is really easy. Just, what else can we do? Can I raise my amount to $1 million?" Which we did. But I ended up having to get 13 investors, which would, probably averaged, I don't know, maybe 70,000, investor. Most people do 50,000 the minimum. I had a couple 150, a couple decent ones to save me. But, that was a sweaty experience. I was like, it was really easy. Then it wasn't easy. Then it was like climbing up a mountain. And anyway, I ended up doing a podcast on that particular episode, and it was called The 10 Tips for Raising Capital. 10 things I learned. And my mentors told me this. He said, "Hey, it was a person like you who was doing a podcast, and it ended up, I kept talking like I am now, and he had 45 minutes, and we did another 45-minute show. He had to do 2 modules to get all these 10 tips in because they had all these little stories around it." My mentor said, take that 2 hours of, hour and a half of recording and go to this company called Upworks and have someone transcribe it. And I got this transcription of 29 pages of that interview. And I'm like, what the heck do I do with that? Who's going to read 29 pages, let alone listen to an hour and a half of me talking? And he goes, oh, no, you don't get it. That's 8.5 by 11. If you put that in a book with pictures at 5 by 7, that's a 110-page book. You add a little bit of extra things around that, put an epilogue in it, whatever you want to do, put an introduction in it. And it ended up being in 2 months, I had an ebook on my website. And it's on my website today. You can freely download it. And it's like, my experiences of raising $1 million in my first deal. So, yeah, that's very memorable. I always think about my first deal. Yeah, I think everybody thinks about their first deal and what you learn. And it was the 10 tips, things to do, things I didn't learn. I'll leave you with one simple little tip. Always raise, like, if you're starting out, at least 25% more. So if 500,000 is your target, raise 750,000. Because invariably, most people do like the deal, but they drop out for health reasons. Family issue came up, bad time in their life. Job looks a little shaky this month. So there's just a variety of reasons. I never ever pressure anybody. I'm like, be empathetic. Just say, hey, I'm just so glad that we had this relationship we started. There'll be other opportunities. Don't worry about it. I just want people to tell me that a little earlier if they can. That's all. But that would be my biggest tactical tip. And I know it's like, oh, Dave, I got to raise $500,000. Now you're telling me I got to raise 750. If you set 500,000 your goal and you don't have any, and you get to 500,000 and you stop and you start, okay, honey, we're gonna take the weekend off, or I'm good. You're gonna be surprised because 1 or 2 people will drop out, and you don't want that 500,000 person dropping out. So another tip would be, if you take a big investor on, get with them frequently, and maybe only take half of that. In retrospect, I should say, hey, John, I really appreciate your excitement around it. Let's do this. Let's just take 200,000 for now. I'll put the other 300,000 on backup. I'll try to get more of that in, but give yourself time to think about it a little bit more. And that way, if that 200,000 left, I would have been much less worried about that than if I had bet on 500,000. Does that make sense?
Yeah, no, that makes a lot of sense. And I think you touched on that's only stuff that you learn as you go through the process.
Yeah.
So hopefully we helped a couple people avoid that mistake. So,
yeah, absolutely. Absolutely.
So how has your life changed since you've gone into real estate and raising capital?
Well, I wish I would have left the corporate world 10 years earlier. That is something, you never want to have regrets. I'm sure, staying that long, I probably learned some extra things, but not a lot. The world of syndication is a wonderful world. I've had tremendous success. I love the time, the flexibility. Now I'm busy. I'm probably busier than I ever was in my corporate job, if not more, as an entrepreneur, right? There's just so many things you would think about in your business. I'm mentoring people. I've got a coaching program. I'm talking to investors. I'm talking to my partners. We're looking at new deals. I'm managing the business, and so you're always thinking now about scaling in. So as an entrepreneur, you're always thinking how to, what cool marketing things can I do to get my message out. So that's always going on. So, but if you're passionate about it, which I am, I never feel like I'm ever really working. It's totally different when I was in the corporate world working for somebody else, and going to meetings that I really didn't feel like were necessary, or meeting with people I just had to meet because that was part of the annual review time, or it was just stuff that I felt that over time, if I had left 10 years earlier, it would have been fantastic. So I love it what I'm doing. It's created a lot of time for my family. Like I can just go when I want to go, and most of the time just carve out that time. And I could just do that. I can spend a lot more time. Never miss events, never miss family events, swimming events, whatever the kids are doing. So that's great. I don't travel unless I look at my wife's schedule and we know where the family is going to be. So, once in a while, so flexibility in your time is huge. Controlling your own destiny. This business can go as big as I want to get it. I always have to balance, how big do you want to be? And, I want to make sure I'm doing the right things for who your customers are, your clients, investors, and making sure they know I'm real and authentic and not trying to be, go too fast, too far, different directions, trying to stay relatively sensible to what we're doing. But it's very, the real estate business, as just the investors can see, it's lucrative. It can be lucrative if you keep doing deals and good deals. And so from that standpoint, financially, I just got back from over the holidays. I went to China and Japan for 18 days. The holiday before that, we were in Australia and New Zealand. I'm not talking just myself. It's my wife. It's my 2 girls. And, we're having the time of our life and we're doing those kind of things. We could just pick up and do them 3-4 times a year if we wanted to. The business is at a point where we've got the flexibility and time, we got the capital to go do that. And so, I feel like I really am in the spot that, I wish a lot more people could be in, because I really think when they see, if you're, just getting yourself passionate and doing something you love to do, whether that really makes a ton of money or not, I'm not really that kind of person that says, I just have to have this X amount of money. It's never a goal for me, the money thing. It's more about the business and driving it forward and, doing the right things for people. But, because we're managing a lot of money. I know my portfolio, I look at my portfolio, we have a investor portal, and it says all of our deals and how much capital. It's $75 million. I feel really responsible for that. Those are people who are really, and people who are doing deals and deals and deals with us. I feel really responsible. I'm investing in those deals. I monitor them. I'm reporting them. So, there is a lot of the responsibility, but it's a comfortable responsibility, because I feel like I vetted those deals. I'm investing with them, and I believe to a large extent they're going to be very happy in the long run with how we do. But that takes time. It takes time for them to really kind of validate, because it's deals 2-5 years down the road. But overall, it's a great space to be in. I really enjoy it, and if I can help anybody understand the world that I'm in, or give some training or advice or thoughts, that's where I like to do. Yeah.
Yeah. All right. Good stuff. So, David, if somebody's looking for your ebook or maybe some information on your coaching, or if they want to hook up and start investing, where can they find you?
Yeah, so easy. It's Thompson Investing, all one word, Thompson Investing, THOMPSON investing.com. And my email is david@thompsoninvesting.com. So either way, you come to my website, we'll capture you that way. And if you like what we're doing, you want more information, I've got an easy thing to set up a 30-minute call and just understand who you are and what you're trying to do and see if there's a fit there. Perfect. That's
great. Well, David, just want to say thanks so much for taking the time and sharing your success with us.
Awesome, Seth. Thanks so much. I appreciate the opportunity and enjoyed the chat today. Thanks.
It was my pleasure. And to you, our reviewers, I wish you well in your journey from purchase to profits. See you next time.